Today we have with us Mr. Vivek Saraogi, Managing Director of Balrampur Chini Mills, and Mr. Pramod Patwari, Chief Financial Officer of the company. We would now like to begin the call with brief opening remarks from the management, following which we will have the forum open for a discussion. Before we begin, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation, which was shared with you all earlier. I would now like to invite Mr. Saraogi to make his opening remarks. Over to you, Vivek.
Thank you. Good morning, everyone, and thank you for joining us on Balrampur's December quarter results earnings call. I trust all of you and your families are keeping safe and in good health. I will initiate the call with an update on the current developments on the sugar sector, followed by our company's key highlights for the period under review. As per latest estimates from ISNO, India's sugar production estimate has been revised to 31.5 million for 21-22 against the earlier forecast of 30.5 million. This estimate is after diversion of 3.4 million tons of production towards ethanol. UP is estimated to produce 10.2 million this season against 11.1 million last season, due to lower cane yields and lower recoveries along with higher diversion for ethanol. UP is expected to divert 1.3 million for sugar towards ethanol as compared to 0.7 diverted last year. On the other hand, Maharashtra production estimate for Maharashtra is expected to be higher at 11.7 million on account of increased area, better yields and better recoveries. Sugar mills in Maharashtra are expected to divert 1.1 million ton for production of ethanol as compared to 0.7 million ton. Sugar production in Karnataka is expected to be higher at 4.8 million ton against 4.5 million tons last year. On the export front, contracts for about 4.5 million tons have already been entered into, and therefore India should be able to comfortably achieve its target of 6 million tons of export. Therefore, with an opening stock of 8.2 million as on 1st October 21, domestic consumption of around 27 million, export of 6 million, and estimated production of 31.5 million, the net depletion to inventory would be 1.5 million, therefore making it 6.7 million. This will be the second lowest stock we are carrying around carrying at the end of the year in the last decade. Hence, demand-supply situation remains fairly balanced, and we should continue to see the effect of that in form of farmer realizations as the season progresses, as the year progresses. Coming to the ethanol segment, the government continues to keenly drive ethanol procurement to increase blending. Country achieved the record pan-India blending of 8.4%. Further, government is committed to achieving a blend of 10% in the current season. Following the revised target of achieving 20% in 2025 instead of 2030, government is working on a policy to mandate flex fuel engines. Towards this goal of 20%, budget is also proposed to levy an additional duty of 2 rupees per litre on an unblended fuel. Our understanding is that if 9% blending is not done, then this 2 rupees additional excise will be attracted. So that is, the unblended fuel means below 9%. We welcome this move as it reaffirms the government's push for blended fuel, which will help India reduce its fuel import bill while increasing farmer income and tackle environmental concerns. Also, in the latest tender, the government has given some incentives for manufacturers in supplying in deficit areas like Chhattisgarh, Jharkhand, West Bengal, Jammu Kashmir, etc. So all in all, it's showing the government's deep resolve in achieving the target of blending as we proceed. Moving towards the company's performance, BCML recorded an encouraging performance for the quarter on account of healthy performance on both sugar and distillery divisions. Sugar segment achieved a healthy performance into farmer realizations. Distillery business had a strong top line and operational performance, attributable to growing volumes and improved realization. I am pleased to share that we have successfully expanded our distillery at Bulgaria by 40 KLPD, expanding our overall capacity from 520 to 560 KL. So Bulgaria has gone from 160 to 200. Furthermore, by November 22, we are on track to commission another 490 KL of distillation, which will take our capacity to 1050. This is basically at two destinations, Balrampur and 330 at Bejapur and 160 at Balrampur. So that is the breakup of the 490, which is to be commissioned in November. This will enable us to produce 35 crore liters of ethanol, including 2 crores of ENA, which means 33 and 2, right, Pramod? So our capacity will be 35, 2 will be devoted towards ENA, 33 towards open market. Following the expansion, the performance of the distillery segment will be further. Following the expansion, the performance of the distillery segment will get strengthened and will be a key driver of growth for us. To conclude, I'd like to point out that Balrampur has been delivering strong profitability even in surplus years on the back of various structural changes in this industry. So the demand-supply situation, as the demand-supply situation sustainably normalizes into various sectors, including that. So basically, we are playing our integrated model to ensure that in all times our company delivers and enhances value. I'm pleased to share that the Board of Directors has declared an interim dividend of rupees 2.5 per share, aggregating to a payout of 51 crores. I'd now like to hand over the floor to Pramod. Pramod.
Thank you, sir. Good morning, everyone. As you know, a detailed presentation has already been uploaded on the stock exchange as well as the company's website, wherein all financial performance, including quantitative data, have been given. So for the benefit of having a larger proportion of time at our disposal for Q&A session, we can straight away go ahead with Q&A session. However, at the cost of repetition, we would like to say that our performance should always be seen on an annual basis. And in addition to that, our installed capacity of alcohol at all point of time will include around 2 to 2.5 crores liter of ENA production, which will hardly yield any profit. Thus, profitability of ethanol division should always be worked out on the basis of net of ENA capacity, that is around 33 crores liter from FY24 onwards. I would now request the moderator to take it further. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pratik Tholia from Systematic Shares. Please go ahead.
Yeah, thanks for the opportunity. And firstly, at the outset, I would like to compliment you and your entire team, especially Pramod sir, for putting up such a detailed presentation. And I think as far as disclosures are concerned, Balrampur is a certain new benchmark because, not many companies are very forthcoming in giving such detailed disclosures and things so transparent, especially on the cost side. There's a full slide which mentions a lot of detailed cost front, how the cost is changing on quarter-on-quarter basis. So clearly, for disclosure standards, Balrampur has set a new benchmark for the industry, and compliments to you and to Pramod sir and his team for doing that. My first question is basically, on the export front, we are seeing that the prices have, gone below 18 cents recently, and we still have another 1.5 to 2 million tons of export pending. And with the, expectation of Thailand doing at least 3.5 million tons more, and that is still, we don't know how much it will do, but India has also changed the expectation from 30.5 to 31.5. So clearly the deficit will not be as big as what was initially being forecasted, and therefore the global price has started to soften. So how do you see this, because we still have 2.5 million tons of export still pending? Do you feel confident that, this will happen? Because if it doesn't, then this 6.7 million ton of closing inventory that you talk in your opening remarks, we might end up with somewhere around 8.5-9 million tons.
So I'll answer one part. Pramod, so what is your view on 4.5 going to 6?
Pratik, we don't have the listing of the total contracts, what has been executed so far, but whatever we understand from the market pulse, that 4.5 million ton is the conservative number. And going forward, on the basis of this prevailing raw sugar prices, maybe raw sugar will not be a major component in terms of further export, but the white sugar, refined, and the low quality white can be a contributor. So what we have seen last year also, there is a perennial demand from various neighboring countries in terms of spot demand we say. So we don't see any challenge as far as the 6 million ton number is concerned. Raw sugar may not go, but low quality white and refined will definitely make it. This is our sense.
So I'll just add to that. Basically, if you see, if we rewind back a year to February last year, Pramod, I think we would have been at 3 million max on today's date. I don't remember. But achieving 4.5 now, 6 seems to be an absolutely reasonable estimate. So there are a lot of small contracts which go to, Sri Lanka, Indonesia, etc. Having said that, even the global markets from here looks like trended up only. This is a correction definitely. But one feels that is also trended up. So in our view, 6 million is absolutely a real possibility. This is after checking with the international trade houses also. And hence the depletion to inventory from 8.2 to 6.7 seems an absolute reality. And just to remind everybody, 2 years back, Pramod, we were at 14.5 million. 14.7 million inventory. You're down to 6.7 with an increased consumption base. With the 27 plus consumption base against a 25 consumption base, your inventory has moved from, 147 lakh tons to 67 lakh tons. So that is where our bullishness on the or fondness in the price comes from.
Got it. So secondly, in the opening round, you mentioned about this ENA contract which you have to supply to the government. So I see that the ENA realizations have also corrected. So are these prices, determined by the government on an annual basis, the way ethanol moves, or it is on spot basis?
So ethanol, as I told you, be very clear what Pramod said, that's a cost-to-cost endeavor. That is for, it's a kind of a levy which the UP government takes.
Yes.
Right. ENA.
No, so my question was that ENA realizations have corrected by almost 20% to YOY. This is a price which is fixed once a year by the government, or this is on a spot basis, it changes every quarter or every month?
There is no price which is fixed formally for the ENA. It is around that 20 or 20 rupee mark. It remains there only. There is no 20-30% correction like that and all.
Because in your presentation, it was 25 or 24.69 in Q3 of FY21. Right now, it is 19.81. So there's almost a 5 rupees
rate of GST. GST has gone up.
So Pratik, the current prices are around 20 rupees only.
Exactly.
Exactly.
So, if the 2-3 rupee correction on 2 crore, it's a matter of 4 crores we are discussing in our balance sheet.
Yeah. Fair point, sir.
Yeah.
Fair point. I think that's it from my side. Thank you and wish you all the best.
Thank you, Pratik.
Thank you. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yeah, hi, good morning, sir, and thank you for taking my call. So, sir, I had actually one question primarily. We have been seeing that the sugar recovery for the company has fallen in this quarter as well over last year's Q3. And last year's Q3, you had cited the red dot disease as a reason for the fall behind the sugar recovery. So this year, barring the late sowing, there has been no such disease-related factors. So why has the yield recovery fallen? A. And B, if you look at it over FY 2021, it is coming down from 11.93 to 11.77. And if we assume that a similar kind of fall will happen this year as well, we'll land up at 11.7, 11.65 for FY 22. So are we to assume that the recoveries are falling in central and eastern UP on a secular basis?
Well, that's a very good question. So two parts to your question, two answers. Pramod, he's talking of recoveries extrapolated on C.
Yeah, pre-diversion.
Pre-diversion. So yes, then it looks like maybe we go to 11.7 this year. The weather conditions have been very bad. Last 1 month, there is no sunlight, 30 days. As soon as sunlight comes, which we are hoping the weather condition on the net, they show an improvement and continued sunlight from the 6th of February. So that is the main factor this year. Disease, etc. is lower. So we are not so worried on the disease this year, but the weather conditions have been very, very bad. So if you see, maybe at the end of the year, and this is a maybe from my side, that Balrampur's fall might be lower than everybody else's fall on a comparative basis.
Right.
But
So,
yes, as a result, at the end of the season.
So, and my second part was that, is it a secular fall happening in the region going forward?
So what I'll do, since there will be many questions on cane, so Avantika, may I request you to just brief on the efforts of the company, which is on a structural basis, on how we look to enhance quantity and quality, ensure sustained availability with better recoveries.
Thank you so much. So also to answer, just to add to the part that my father was addressing about the recoveries possibly having the lowest drop in comparison to the rest is we had already last year unleashed a very, very robust cane development program wherein we had achieved 85% of our planting of cane in March. So that cane is yet to be properly and fully crushed at this moment, and we should be better off than anybody else, I would think, in terms of our neighbors, of course. In terms of recoveries, once that cane comes into crush fully, again we are going to be doing this and preponing planting. So this gives the crop an extra 1 month to grow, and it saves us from these truant weather conditions that we've been dealing with this year. So that's the first program. We plan to increase planting by 10% this year. So we want to increase the we increase planting 15 to 20% this year. So area under cane we want to increase by 10% next year. That would also consequently lead to higher crush. And we have already unleashed a very, very robust, again, varietal balance, wherein we are no longer going to be depending on just one high sugared variety, but we are going to be spreading ourselves over 4 or 5, which are all up to the mark of 238. We should achieve this very, very soon. In fact, as also mentioned last year, and repeating the mention, 118 variety is something which we have aggressively gone towards, and we are increasing that as we speak. That is supposed to have, I'm sure it has higher recoveries than 238. So that is very good news. We've been able to spread it across our areas, and you should see a result of that as well. Other than this, we have put in a state-of-the-art tissue culture lab, which is going to be servicing all the 10 units. Tissue culture is, it's a way to multiply newer varieties faster and also to keep them disease-free. So we are not only multiplying newer varieties, but we are also keeping 238. We are keeping a reinvigoration program for 238 as well. Other than this, we are also, so that we never fall into trap of disease, and we are able to protect our crop from any problems that might occur. We are doing a seed nursery program as well, where every 2 to 3 years the crop becomes fresh in the entire catchment area of 3 to 3.3 lakh hectares. Rather than this, Another thing we are focusing very, very greatly, we are testing upon right now is the ratoon management. Ratoon management has historically been very backward in Eastern UP area. Central UP is still all right, but Eastern UP area it has been backward, and that's why when you see the season starts, we have slightly lower recovery, slightly lower yield. We want to change that, and we are putting a very, very big thrust this year on it. So again, next year, maybe even start of season should be better. Other than this, we have also achieved the highest ever amount of autumn planting last year. We've achieved around 6% of our total area under cane as autumn planting. So at this time where we are right now, where you're changing over from ratoon to plant, the autumn plant cane gives us a very, it gives a shot in the arm, so the recovery doesn't dip as much as it could have actually right now, considering the weather conditions. Without sunlight, to be even getting what we're getting now is a big deal. And also this crop tends to be disease-free. And lastly, we have also made 3 state-of-the-art soil testing labs across our units, wherein the soil will be tested from all the catchment area, and fertilizer, nutrient, micronutrients will be prescribed in a tailored manner and according to the need, and it should have better results with lower cost to the farmer. That's it from my side.
So what we are doing, as you would have heard, is we are unleashing a full-fledged cane research, protection, growth program, if I may say so. So this is for example, in expansion, if you have to put up machineries and expansion is up, the investment is about 1,000 crores, you need to spend in cane to create sustainability, which is in a structured fashion. So that is also a very big program we are taking up in the company. So hopefully, or probably till now, because of East UP, we've been falling short, but hopefully in the next 1 or 2 years, you should see the differentiator.
Okay, so are we to assume that yields will go back to like 11.9, 12 or something, which we had seen in FY20 last, in terms of the pre-recovery yields?
So that's what I said. Hopefully, just wait for a year more.
Okay.
So we look to, let the performance talk.
Right, sir. Thank you. My second question was an allied question, that we are talking about crushing 5 to 7% more cane during the current season. Now, my 3Q is already flat, which is some part of the season over. So we'll have to crush incrementally another 9 to 10% more in 4Q. And as you already said, that the first month has been impeded a little bit because of the lack of sunshine. So are we still confident that we'll be able to recover in fourth quarter in terms of the crushing?
Yes. Fourth quarter and in April.
Some portion of crushing will spill over from March.
Yeah, and that is good. Until April, what you crush. Yeah, we are very clear on that one till now.
So Rajesh, just to clarify, when we say 5 to 7% more, it will not be on a financial year basis, but on a sugar year basis.
Yes, on a sugar season basis.
Sugar season basis.
That basically means April, basically, yeah.
Yeah. So just, wait it out a bit more.
Okay. Thank you, sir. Thanks for the question. Thank you.
So when the need for cane comes in with big expansion and big distillation capacity, we hope to come in with both feet in and with, open arms, giving cane to the mills.
Thank you. The next question is from the line of Vikram Suryavanshi from PhillipCapital. Please go ahead.
Yeah, good afternoon, sir. One is that about this reporting structure in quarterly, we have not seen the segment reporting of power. So going ahead, are we combining with the sugar, or how is our view on that?
So as permitted by Ind AS, the way the accounts are internally reviewed by the management, so that becomes an operating or reportable segment. So taking that into consideration, and you are aware of the fact that Cogen is no longer operational off-season. We operate only during the season to support our manufacturing processes and the activities. So the cogen activities has been combined with the sugar, and the distillation activities has been combined with the distillery segment. We have just given the operational cogeneration data, and financial data has been merged with the respective segments.
You got it. Yeah. And in case of distillery, how much would be our capacity, which will be dual feed out of the total capacity going ahead, or are we still considering on that?
We have already commissioned Buloria distillery. With that, our current capacity is 19 crores liter, and by FY24 it will go to 35 crores liter. Again, I would reiterate that within this 35 crores, 2 to 2.5 crores liter will be dedicated towards production of ENA, which will hardly yield any profit, and this ENA will be for discharging our UP state excise reservation obligation, molasses reservation obligation.
My question was on raw material side. Will some of the capacity will be on grain based out of this, and how much of that capacity would be?
Okay. So that out of 33 crores liter of ENA capacity, 5 crores will come from grain side, and 5 crores will come from juice, and the rest will come from B-heavy route.
Right, perfect.
Okay, got it. Yeah. And I think what we are hearing recently is that there has been significant increase in the transfer price for the B-heavy molasses. So what was it for us in this quarter?
So we increased the transfer price of B-heavy molasses from 7,000 rupees a ton to 10,300 rupees, which has become effective from 1st of October.
Okay. And was our export under any EQ, or it is like without any government support and under any obligation?
Yeah, we have exported 15,000 tons during the quarter, and this has gone without any support from the government.
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Trilok from Aditya Birla Capital. Please go ahead.
Yeah, hi, good afternoon, and thanks for the opportunity. First of all, I must also reiterate the fact that the disclosure and the detailed presentation is top class and maybe amongst the top quartile across sectors, not only sugar. Second, I just wanted to hear your thoughts that you guys, from a 2-year perspective. I know we have already announced the grain-based molasses. So do we intend to sort of reconsider the plan of further expansion, because nearly 50% of the India's demand will be met from grain-based ethanol. So just want to hear your thoughts on that.
So basically, as you know, we are a little bit of conservative people. So we'll first do this entire program in the year and take up based on economics, how rice comes in, what's the profit there. We're going for it next year. We are actively internally seeing that, but post commissioning of every expansion in the current year.
Sure. And last question is with regards to the export. When we do you think this could be the last year of probably exports from the country, given will be very tight in context of demand supply after this sugar season ends?
So it all depends. So therein you yourself are building in the best case for global prices to remain strong down the years. So Pramod, if we see India over the last 3 years, 17 million tons has been provided by India to the world market.
Okay.
Assume, what you said is true, and there are a lot of chances that being correct. Maybe if that happens, the world market itself can get to a level where exports, little bit of 1 or 2 million exports, if so needed, can be a very profitable proposition, if at all. So have I made myself clear? India has exported 17 million in 3 years.
I hear you, sir. I hear you. Yeah, fair point.
And on the India vanishes from the market, 67.5 is the opening stock. Assume you produce, diversion is, I'm just drawing a scenario next year, promote diversion 4.5 next year. if there is a little bit of tweaking of monsoon in Maharashtra or something, and assume production comes down to 28, consumption production matches, and you don't need to export, or you just remain at 29 and you need to export 1 million or 2, it should go like in a jiffy.
Sure. Okay. Thank you. Thank you very much, and all the best.
Thank you.
Thank you.
The next question is from the line of Falgun Datta from Jade Securities. Please go ahead.
Yeah, good afternoon, sir. So what would be the cost of sugar before considering interest cost for the current sugar season 21-22?
No, we don't give forward-looking statement. Whatever cost we have achieved for the 9-month period ended, that has been disclosed in the presentation.
But sir, this would be known, right, given that we know the sugarcane cost and rest costs are mostly same.
Ma'am, recovery is not known, no?
Okay.
Right.
And what would be our expected distillery volumes for FY23?
FY23 maybe 23 to 24 crores.
Because we'll get 4 months working in the pensions.
Okay.
Within that 23-24 range, 2.5 crores could be ANA.
From that you said.
Okay. And just to ask the other way, I mean, I'm not asking the precise cost of production. On account of the cane cost increase would have gone up by 2.5 rupee a kg, right, this season?
Cane cost has gone up by 25 rupees per quintal.
Yeah.
Yeah, so the cost of sugar per kg would have gone up roughly by 2.5 rupee a kg, right?
That will depend upon the final recovery.
You kindly wait for March, you'll get your answer.
Okay. Okay. Thank you. That's also.
What we are saying is, if you're talking on margin, basically, if I am to see the price of sugar last year in the month of January, right? It was 31.5. Do I recall correctly? Dekh le. Just check if somebody can tell you. So I remember they were between 31.5 and 32.
Yeah.
Today you're at 34.5, 35. So you're already seeing the result of the inventory depletion, which we have briefed you on the call.
That's true.
We are seeing firm sugar prices and some volume improvement.
Okay.
So maybe, the cost will get known when it does get known, but we remain buoyant as we proceed into crushing this season's realization in April, May onwards, continued from now, and as we proceed into the future.
Okay. Thank you, sir. That's helpful. That's all from my side.
Yeah.
Thank you. The next question is from the line of Aanchal Lohande from JM Financial. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity, and must compliment here with respect to the presentation. Very exhaustive and very interesting one. My first question is, in terms of the biosyrup, wanted to check your view in terms of have we already tested it, and if it is doable, how does that change in terms of our dependence on the grain for our Megapur plant, and also with respect to the capacity additions in future?
No, I didn't get your question at all. No, what you're asking me is
storage of biosyrup, which Praj Industries is talking about.
No. So why should we do that? Our capacity is built on a certain amount of cane crushing daily. So the distillery is sized at a level where whatever I crush during the season, I can consume that in the distillery. The reason we have done that is also to test and play out this grain-based business. Off-season, we'll do grain-based. So had we gone in for the biosyrup technology, we could have made our distillery at 200 kL instead of 330 kL. We could have stored the syrup. So we're not looking to do that. We're looking to use the capacity in the off-season for grain.
Fair point. That is for the current expansion plans what you have.
Right.
But if this was to be a viable alternative, would that mean that we will go for further distillery capacity addition? Would that be a fair assumption?
So I would say that we would look at grain, let the things play out, and we have enhanced our distillery to a level where, as per the current configuration of the factories, it is now fully utilized. So mostly I would see any more business coming could be through grain, because we won't want to sacrifice more sugar also. So everything is doable. It depends on the economics. So let us see the economics the way they play out.
Right. If I understood correctly, you're saying the current distillery capacities are keeping in mind the cane crushing capacities, and they are kind of fully utilized. If further expansion, it will be more from grain, or the way Maizapur has played out. Is that, have I got it right, sir?
Okay. Just forget all what you said and listen to me. There are three parts to this. One, how much of sugar do you want to make? In bracket, how much do you want to sacrifice? So only now if you want to sacrifice more sugar, would you put up another distillery on the juice level, right? That would cause you to sacrifice the sugar, no?
Correct.
So we are already reaching a very big level of sacrifice next year, because Balrampur also will be partly run on juice, right, Pramod? Maizapur fully run on juice. Lot of B-heavy capacity is available everywhere. So therefore, there is a certain level of sacrifice you would have reached. Our view, therefore, on sugar prices from the next year onwards is also not bearish at all. So you want to, as a company, produce that much of sugar, right? So therefore, more distillation capacity can be looked at if grain business is viable. I think we just said, being conservative, we want to let 1 year run and then see it.
Understood. That's very, very clear, sir.
Thank you.
If you could help with a couple of data points in terms of what is the landed cane cost for the quarter gone by?
Yeah, Pramod is in.
Just a moment. 368.
And also, 368. Okay. And in terms of distillery volumes, you said 23 crore liter, 23 to 24 for next year. In the last call, you had talked about 16.5 or 16 crore liters thereabout for the current year. Would we be able to achieve that, or you think there could be some delay or push in the following year?
FY21 we achieved 16.5 crores including ENA, and we are hopeful of achieving 16.5 to 17 crores in FY22. We have already achieved 12.5 crores in 9 months.
Pramod, are you talking dispatch or production?
Dispatch.
Okay, yeah. Right, dispatch, yes.
Understood. And this 16.5, 17 will include 2.5 crore liter of ENA.
FY22, 2 crores.
FY22, 2 crore liter. Sir, can you help us understand what is this exact obligation? Is it 18% of the normative calculation?
Yes. You got it right. 18% normative.
Right. But in that case, this number looks fairly high in the following year. So this 2.5 crore liter is basis is 18%, or there is a cap?
Yes.
That is much.
No, it's 18%. Our calculation is perfect. It's
understood.
Out of 2 crores, 2-3 lakhs lower only, not higher.
Understood. And in terms of the update for this cogeneration case, where are we? And since we have kind of now reworked on the segment disclosures, does this also mean that the possibility of we having the kind of profitability contribution from cogen is gone?
So the case, despite our best efforts, we can't get it on hearing, COVID, some excuse or the other. We are trying our very best there. And what was the second question?
Anshul, as far as the profitability of the cogeneration segment is concerned, it will continue to be there. I'm not commenting on any number, and it will get clubbed with the sugar division and the distillery division.
And we continue to sell bagasse to get the revenue, which is better than converting into power owing to the downward revision of the tariff. So it's not that,
Sorry, sir. Please complete, sir.
No, that's all.
Okay, so I just wanted to, understand this bagasse selling, because what is true for us will be true for the entire state. In that case, what is the kind of demand supply we're looking at for the bagasse? Where the user industries are, what their capacity, their requirement for bagasse is, how much is met by sugar industry, etc., etc.
Boss, we don't do so much of research in terms of this. We know who our buyers are. It's basically paper and pulp units. And some of them are very close to us in terms of location. And we try and get a best price out of them. This year we got a higher price than last year.
Right. No, where I'm coming from, sir, is, currently what we are realizing probably would be between 1,700, 1,800 per ton for bagasse. Could there be a downside risk to that number?
No. Next year we are seeing an up. See, last year I don't remember exact figures. We are going to get a higher realization by at least 200 to 300 rupees a ton this year. And in the next year, our cogen business, our juice business and the grain business would require bagasse from our factories only. Therefore, having lesser quantity to sell, we should get a much better pricing.
Understood. And just last question, in terms of, you talked about 5 to 7% higher crushing for the season, but if you could help us in terms of assuming all normal, for the coming year, given our plans with respect to the varietal change, the plantation overdrive. In terms of the cane crushing volume for FY 2022 and 23, if you could help us with that, sir.
No, we just told you for the current season, which we are
on the fiscal year perspective. Fiscal year.
That promoter said 5 to 7% higher. And next year we can't.
Fiscal year.
So fiscal year promote you.
Fiscal, I don't have the figure right.
He'll give it to you. We talk crushing season. Next year, definitely, based on what Avantika told you and our very, very concentrated effort, we are hoping for a much, much better. Yeah, so we can, better ideas to get in August, where the entire planting data and monsoon has, largely played out.
Sure.
Yes, some evidence will be available in May.
May. Okay.
Yeah, because by then
I'll come back.
Yeah.
Thank you.
Thank you.
The next question is from the line of Manish Otswal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. I have only one question because most of the questions already answered. The yield of ethanol production from B-heavy route for every 100 quintal of sugarcane. So, because since we are now talking about aggressive diversion of sugarcane towards ethanol production, so that will result into impact of the overall company profitability. So, what is the yield movement in that space, sir? To give some indication over there.
Will be in the region of around 31.5 to 33% recovery. Recovery of ethanol from B-heavy molasses will depend upon the level of sugar sacrifice.
It's closer to 33.
Closer for us, it should be around
33 for our company, yeah. Closer to 33, just slightly below.
And in terms of, you always say, sir, we should look at our performance on a yearly basis. So, in terms of cost of production of ethanol, so apart from the sugarcane, what are the other variables which move in a high volatility, or there is no such variable?
Chemical.
So, Other than raw material cost, you can make some inference with the last year's number.
Okay.
And for the B-heavy transfer pricing, we have already updated you that we have increased it from 7,000 rupees a ton to 10,300 rupees a ton.
Okay, sir. Thank you, sir. Thank you.
Thank you. The next question is from the line of Jignesh Kamani from GMO. Please go ahead.
Yeah, hi. Just a follow-up further on what Achal has asked on the biosyrup. So what Rajesh commented that the biosyrup can be stored throughout the year with 1 year plus shelf life and it can be easily transported. So assuming small distillery which doesn't have the independent distillery can convert part of their sugarcane into biosyrup, so 30 to 40%. Will it increase the availability of biosyrup and hence its technology is viable? Will you be able to use that in your distillery and run for a higher number of days on the sugar or biosyrup, or you can increase the distillery capacity? We've
answered that.
I'm not talking about you're increasing the consumption. I think if biosyrup, like right now you're consuming the molasses. So if biosyrup is available, can you use that to increase your capacity without increasing your sugarcane capacity or sacrificing sugar?
Jignesh, we have already spoken about our roadmap. As of now, we are not looking at this segment.
Sure. Second question on the Brazil. Last year there was a heavy drought and hence why production in Brazil got impacted a lot. Recently there has been enough rain in the Brazil. So do you expect that plantation in the Brazil and the sugar production will increase a lot in Brazil, at least from next year onward, which will impact the global sugar supply?
We are not very expert as far as the global scenario is concerned, but whatever we understand looks like Brazil can go to a level of around 34 million tons of production next year.
Which is not much if India is out of the market.
Sure. Okay. Thanks, sir.
Thank you.
Thank you.
Thank you. The next question is from the line of Anupam Kaswami from BNP Securities. Please go ahead.
Hi, sir. Good afternoon. So my first question on the Megapur unit, we have to understand it is based on cane juice and grain. Only that Megapur unit, what will be the max revenue at a full capacity operation and what could be the EBITDA on that?
We can't do.
Anupam, we have
capacity
we have spoken earlier also that it will have a potential to generate around 650 crores of annual revenue.
And so of that, can we assume an EBITDA margin of like 45 to 50%?
No, we cannot.
EBITDA margin will vary depending upon the many factors, including the transfer pricing and the cost of rice as well as the cane juice. But again, I would like to say that kindly visit the stock exchange site wherein we have said that it will have a payback period of 3.75
years. Right. Very good.
Okay. No, I'm asking from the point of view that right now what the margin is, excluding the transfer pricing effect, will we dilute the margin going forward with cane juice mix and grain? Or will that be remaining same? The question was from that angle.
We don't look to put up new money in businesses which in our sector dilute margin. So trust us on that one. That is our calculation.
Okay, sir. My last question on the associate that we decided to sell off our stake. How much cash flow can that generate, and what could be, if there is any profit from that?
Anupam, Board of Directors has just approved the disposal of our investment.
Yeah.
So in due course of time.
As the transaction.
Yes. We will let you know.
Okay.
Yes.
All right. Thank you so much. I'll join back in the queue.
Thank you.
Thank you. The next question is from the line of Gangadhar Chini from Elara Securities. Please go ahead.
Yeah, hello. Yeah, my question is, at what price level of sugar would you consider not diverting to ethanol? Because at some point, if sugar becomes extremely profitable, then there's no point in converting into ethanol, right?
So, the truth is, if you don't divert into ethanol, you will produce more sugar, which will dampen the price. So there is a blend and a mix which everyone decides, and we would try to create at the beginning of the season a best case blend for the company.
Okay. Now my direct question was, let's say sugar prices go to 40 rupees per kg. Would that motivate you to not sacrifice sugar for ethanol?
Okay, let me attempt to answer that directly. If everybody in the country who's having ethanol capacity sees this price of 40 rupees and stops diverting to ethanol, you will make 4.5 million tons of more sugar, which will ensure you don't get 40 rupees. So, as I said, this price will be available if there is no surplus. No surplus is going to be owing to diversion into ethanol. That ethanol price is being, I would say, to the best of my understanding, the government of India has taken a very pragmatic view on the ethanol pricing. So, having, you can't look at just one portion. That's what I was trying to explain to you. So, if sugar goes to 40, everybody puts up, everybody stops making ethanol, sugar will come back to 35.
Got it.
Am I clear?
Yeah, thank you.
Thank you.
Thank you. We take the last question from the line of Suhas Nayak from Krida Capital. Please go ahead.
Hello.
Yes, please.
Yeah. Good afternoon, and congratulations on a very nice presentation. I have one question. One is, you said you'll be cautious and wait for a year before taking further call on grain days. So what are the unknown factors right now which you are not aware of right now, or which can be potential risk, which is why you're planning to wait for some time before taking a fresh call on further investments?
It's a good question. The whole thing is, there is a limited amount of capital and, we want to put up at a certain point of time, having undertaken such a large expansion of sugar and distillery together. So we just want to give it some time, one, and two, we just want to run the grain business for some time. So, like we've run sugar over years, grain we'll be doing for the first time. So it's just nothing, we just want to wait a little before spending more. There is no large variable one is grappling with or uncertainty. So it's management bandwidth. We want to, take up as much as we can do very well.
And just to add, in January 21, we were at 360 KLPD.
Right.
So we are moving from 360 to 1050.
Yeah. And maybe one more question, last question, is the kind of cash generations we are looking at going forward. Are you planning any related diversifications, maybe chemicals or something right now?
We are all, as a company, one keeps evaluating various opportunities. So as and when something comes up, everything is at the drawing board stage yet. As and when ideas fructify, the board will deal with it and everybody will come to know. But yes, one keeps dealing with ideas.
Many thanks. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments. Thank you, and over to you all.
Thank you, everyone. Thank you for being with us on this call. Any more clarifications, me and Pramod are there.
Thank you so much.
Thank you very much.